Well, I see that gasoline prices are going to drop at least another 20 cents a gallon over the next couple of weeks, and they could go down another 10 cents a gallon after that, given the significant decline in gasoline futures, which are off nearly 67% since early January.
Wow. Of course, irony now is anytime that happens, it's because the economy's poor, people aren't driving, and so forth. So there's not much you can really take advantage of, is there?
No, there isn't. And by my numbers, gasoline demand in the U.S. is already off nearly 40%. It's even worse out on the West Coast, where it's down 50% with all these shelter-in-place orders coming from the variety of states.
50% drop. I mean, how is it not down more? You have crude below $20 a barrel. I mean, can you break down the average gasoline price nationally now to say, hey, this is how much is basically fees and taxes and surcharges, and this is how much is really from the price of crude?
Right. Well, if you look at the futures price of gasoline, that's always a good starting point. That's about 60 cents. If you look at what all the taxes and the fees are, you're looking at probably another 50 to 80 cents a gallon, depending on what state you are in. The local retailer on the street is the one who's recovering a lot of the margin these days, because you'll notice that gasoline prices nationally are only coming off about 2 cents a gallon per day,
right,
while the price of futures has actually crashed.
Yeah, no, I have to fill up on my way home, so I was paying attention to that exactly this morning. So how much? I know you focus on this more at the gasoline pump, but can you quantify the damage this is doing to the U.S. economy? And again, it's a strange discussion to be having when we should be pleased that a major cost is down so much. But how much is it hurting now, the U.S. being such a major oil-producing country?
Well, it's certainly a significant hit in states like Texas, New Mexico, Oklahoma, Colorado, and Alaska, which are the big oil producers. And you're seeing the capital expense budgets of not only the major oil companies, but all the producers have been cut by 30 to 50%. And of course, where the layoffs are occurring is in those service industries that you've got, like Halliburton and Schlumberger. And of course, the small producers now, they're pleading with the Texas Railroad Commission to implement production caps, which we haven't seen since the 1990s.
Production caps, in other words, saying, it's quotas. It's basically, it's a version of what OPEC does.
That's exactly right. In fact, OPEC has invited Texas to attend their next meeting because, Texas would like to see oil prices rise. But the fact of the matter is that the demand destruction that we're seeing worldwide is so great that there's not enough time for OPEC and non-OPEC producers to react to it. And as a result, we're filling up inventory everywhere we can place a barrel of crude and refined products.
Do you think, we just spoke about this with Jim Yorio as well, the president spoke with Vladimir Putin yesterday about the collapse in the oil price. Do you think he would do something like lift some sanctions on Russia, maybe in exchange they, kind of take their foot off the gas when it comes to oil production, and that's a way out of this, or no?
Well, I think that's part of the way out of it. I think the Russians would be looking for a deal on sanction relief. But in the meantime, if you put this in context, oil demand is down at least 15 million barrels a day here in March. In April, there are estimates it's going to be down 30 million barrels a day. At the same time,
wow,
Russia and Saudi Arabia are increasing their exports by 3 million barrels a day. The gap is simply too wide for even a small agreement to handle. So as a result, as we fill up all of these nooks and crannies onshore and take tankers for floating storage, we might actually see OPEC is forced to cut production because there's simply nowhere to go.
Wow. Andy is informative as always. Thank you so much.